And a couple things I want to do, like I start these session. Well, here we've got an example of what I'm going to talk about today happening right now. See these 36 halves or 36 quarters? They were red. The when moment has already happened. It was right above 36 quarter. But I want to go a little deeper into this from 2 or 3 weeks ago because I get the feeling that not everybody is understanding it as well as you should, based on some questions that I get. Just based on, I don't want to make the assumptions that people see what I see. This has really helped, create a better visual for me, and it could for you guys. Like right here, this guy is probably stuck. When I say this guy, this market could be stuck. But here's what's interesting. Let me do this now since we got an example. See 37 evens? And I got this on Sim, so I could offer with one lots. You could bid with the bidders. But you see how your 37 even bid, and yet the aggressive selling, now it's gone, but the aggressive selling came in at 37 even. All right. So it should be offered probably a couple ticks lower. The fact that it's not is gets you to scratch your head to say maybe there's some more upside. Now that imbalance went away, but it would get me to worry if I'm short that the sellers couldn't get it to go, at least not in a timely fashion. Now we're running midday, so everything's a little slower. Plus today is May 22nd for those watching in the future on recording, and you might see that the markets were slow today. For the most part, we did have a pretty decent move out of nowhere around 9 Central. But point I'm trying to make is you could see it in here where at 36 quarter, they go bid with an aggressive imbalance. That's what you want to see if you're long. Plus, it was going to get through this red. The point I'm trying to make is the imbalance came in at 37 even. It's gone now, all right? It's pretty balanced here, 37 even quarter. But 37 evens were bid at the time that they were trying to crack and quickly sell the 37 evens. Red edge zones come from where? They come from the fact that there's more selling than buying aggressively. There are more people hitting the bid at that particular moment than lifting the offer. And if there's more people hitting the bid than lifting the offer, it'll go red. And it'll go red with the amount of contracts, obviously, that it is being hit. And that's the ratio or the balance or lack thereof. Right now, there's 623, 603, pretty balanced with the relationship of 37s and 37 quarters. Here's the squeeze up. The sellers quickly came in when it went 37 even bid, did not get it to go lower. But what I need people to understand when you're watching this is the relationship between your dome and the edge zones on your charts. So when you get a red edge zone and the market is still bid at the price that you got the red zone, that gets you to scratch your head that maybe we're not going to go down, because it should have flickered and hit. And I'm moving my hands like you guys could see me, but they hit it, and it seemed like they just slapped the guy in the face and he didn't flinch. And so those are moments that I think will help people understand when these things come in, what should happen. And based on that, did what should happen, didn't happen. But know the bid and offer. And that goes back to the very early trading exercises of the edge course of quoting the market. Right now it's 37 half bid for 95 and 170 offered at 37 3 quarters. 37 half offer now. Quarter half, quarter half, quarter half. 300 by 200, 160 by 200. Quarter half, quarter half, quarter half. Quote the market. You don't have to trade that fast, but get your mind conditioned to think faster. When you think faster, you recognize faster, you react faster, you're able to see more. But if you want to be really slow and methodical because you trade a longer time frame, good for you. People will pass you up. 37 quarter, 37 half. Bid offer, bid offer, bid offer, bid offer. If you watch that exercise about the quoting exercise, you could say the bid first. Now the 37 quarters just went off, right? Even quarter, even quarter. You see I shorten it up? I don't say 27, 37 even bid at 27, 37 quarter offer. No, it's not even 37 even. It's not even 7 even. It's even quarter, even quarter, even quarter. 100 up, right? It's about 100 on the bid, about 100 on the offer. It gets down into, okay, the aggressive sellers came in even with either with a big filter, a big order on the filter, or these edge zones, a red edge zone, and yet the 37 evens got heavily sold or quickly sold because the edge zones are tracking tempo, and the son of a gun couldn't go down, or he couldn't even go offer, rather. The bid couldn't go offer. The bid couldn't go offer. What just happened here? It went quarter bid, half bid, three-quarter offer. Half bid, three-quarter offer. It'll help you follow the market, trust me. You don't have to scalp it in order to be a good, you don't have to be a good quoter in order to be a good scalper. I'm not trying to get people to scalp. Get people to speed up their thought process. And that's what I'm talking about. And I don't think people understand it. I think some do, and I think others don't as much as you should. Now I'm putting together a, I don't know, maybe a couple, maybe a few, maybe one, because I don't know how long it takes. But I'm taking a trading room session or 2 or 3 and cutting up the highlights like I do in Track 5, only updating some of the videos in Track 5 to show you the new edge zones, the new screens, and everything else. But these moments that I'm talking about right now, and I'll share it with you guys, but you got to watch it. Might be a 6-minute video of a 2.5-hour session. And now you guys could watch it, but you got to watch it again and again and again and again and again so that you begin to see what should happen, and yet it's not happening. Some of you guys are great at doing this already with Delta stuff and profile stuff or whatever the hell it is you look at. But look at it also with this stuff. You know, when it should go up. Why? Because it should have went down. And in the room, as you know, I'm wrong with making calls, but the accuracy of the when moments come from that. Dr. Raj said over the last week, since he started quoting the market while he's in a trade, has helped me get out of my losers earlier with no big losses as before. So Raj, it's helped him while he's in the market. That's awesome. That's absolutely awesome. But you had to practice it to know how to do it in order to do it while you're in a trade. Great idea. Not only quote the market as you're watching it, quote the market after you're in it to stay focused. You know who knows? You know who's following a baseball game the most? The announcers. They have to. It's their job. Not just the manager and the players. Yeah, they're following the game. The announcers. Because they're calling balls and strikes and going over situations and things like that. Now, I had a guy come in, and when I get reminded about things, I want to remind you guys about things. I think it's important. So I'm exposed to a lot of retail traders, more than you guys would be, because you're not in the educational business. But when a lot of these guys come in, the conversion rate of people coming into the room is low. And that's a good thing because most people want to understand stuff before they learn stuff. Okay? And that's fine. In a real good way, it shows you the lack of effort your competition is willing to make. Forget about money, investment in education, just effort. They don't want to make the effort. Monetarily, work, time, they want, like everybody else, the results before the work. And we're not punching down at those idiots. We're looking up, trying to understand what institutional people might know, right? Or what the smart money might know. That's what we're looking at. We're aspiring to find a leader in the market that can make us money even if it's for a week because it's a stock that's leading us or an index that's leading us. That's what we're looking for. We're looking up. These guys behind us, the only ones that I deal with and work with are ones that are serious like you guys at some point were, or you wouldn't be here because everybody in this Edge meeting is an Edge member. See, I came right back down to these 36 quarters and stopped and re-rallied. Now, I'm not sure if there was a qualifying moment in here to buy it, unless you were just playing price, or if there was an ancillary. The point is that there's a moment in here where you say, when you're trading right here in the yellow dot, you don't know about this pop yet. You don't know about it. Nobody does. But at this yellow dot, you say to yourself, this seller gets us to go down, but if it comes back up through it, I'm going to scratch my head here that this thing is not weak. Then I see a green imbalance and it got it to go bid. And if you want to buy it, you buy it here. And if you can get it to run ASAP, you got yourself a good location. That's what I'm trying to go over. I think 2 or 3 weeks ago when I went over looking at the flicker of these edge zones, what I mean by it. And it's a no-brainer for me, but I come to realize it's not a no-brainer for many others, and I don't want to assume it is. That's what I'm going over again. Now, here's a moment. 37 quarters right now are being bought. And yet, look at the dome. They're offered. But yet, they quickly come in and buy it and really didn't take them bid yet. I'd just be thinking, this son of a gun better go up quick. Here, I'm going to say, if I'm bullish, I'm not happy that the quarters are offered. I'm a little happier when the quarters go bid. Why? Because they should have went bid, and they should stay bid, and they should start walking up soon because the imbalance just came in. This is my internal clock that started. I'm back to pass. If I'm long, I need this market to start going 38 even trade, which means 38, 37.5 bid, 37 3/4 bid. And I certainly want them to say 37 quarter bid. Why? Because that's where this imbalance came in. Now they're doing what they should do. Now stay above here. I don't want them to down tick. If I'm bullish, now I got my line in the sand. I didn't like that they took a few seconds to go bid, but that's why you don't just panic out. But you know where you're at right now. Your clock is ticking. If you're long 37 quarters, you're keeping it above it, at or above it. That's what I mean about at or above the level that now is important. That's why I want to go over this in this meeting, and I was hoping for examples to surface, and we're getting them right now. So you already got this support to hold, all right? You walked up, you got an imbalance at 37 quarter. They went bid slowly. They went 37.5 bid. They traded some at 37.75, a couple hundred of them. They're 37.5 bid for 200, but then he pulls 100. Now there's only 100 left. There's 400 on the offer. But again, you're staying above the 7 quarters. And watch it. Your clock is still going, but you could string it out longer when it's above your price, right? It's like instead of throwing the ball away and puking the long position, you're scrambling. You got some more time. You moved out of the pocket, but now you like what you see, 775s. Your clock starts when you see the imbalance, and if it doesn't go, you get out. But after about 5 or 10 seconds, it went bid. Now it's bid again. Now they're into the 38 evens. This is what you want to see. Now you can begin to get out of the position. Now you see another aggressive edge zone came in. And what did the 38 evens do when the 38 evens went with an edge zone? They went bid, didn't they? They went from 38 even offer to 38 even bid. Your clock starts again to have a continuation. Then you draw in some other context, like could we break out because it's a balance area, or some buy stops above? Is the NASDAQ going? Does the Dow have some buy stops above? An ancillary helping you go up, right? You're taking order flow, market relationship, you got yourself a skill. That's like having a hammer and a screwdriver. Now, do you like that, what just happened? Hell no. If I was long, I'd be offering 37 3/4 to get out of all or some. If I was long from below. I don't like that the imbalance came in and they clicked down. Now, do I puke the whole position if I'm long from below? No. I get out of some in case indeed they start to rotate back down to 37 even or 36.5. I don't like to see that when they shouldn't have done it. But if you trade multiple contracts, you don't have to be all in and all out. Maybe you all are all out. You got to see it pop again quick, and 38's become important. Who cares? It shook out a little bit to 37 quarter. We know why it held. Get you out of a little bit at 37 3/4. And you're not mad if it keeps going up because you got some on. You're not mad if it goes down because you got out of some. Making sense? You got to adjust your clock a little bit because it's midday and it's been slow for most of the session anyways. If you guys are watching this in the future, volumes are pretty light here as we move to the end of May and into an early Memorial Day weekend, even though it's Tuesday. I don't like a lack of continuation up when the 38 evens were quickly bought, right? I don't like that we're taking time. I do like we're still above 37 quarters where this whole idea came from. I do like it held on a rotation down to 37 quarter, okay? And let me get this out of the way. Let me blow this up. I think that in context, they should take this open out and run to test 40.75, and I think this is a good target. But you really got to put yourself in a position, as I bring the dome back over, to stay above 37 even, 37 quarter, because that's where this edge zone came in. I think this helps a lot of people, understanding if it's bid or offered when the zone comes in and what has to happen. That's why I don't like the 38 evens, because we had them go bid and they couldn't hold. They dug down here. Do you see how your clock would have started and you would have scrambled earlier when that 38 even sequence happened? Does this help? And I'd put this up and trade and everything. I just don't know if I can. I don't know if I'd be able to trade with everybody eyes exactly on my stuff and make the same decisions objectively than I would in a box. I'll just be honest. And I'm not willing to take the risk. I'd probably get more people to follow me, but I don't want them to. Actually, I'd probably get less people to follow me because they think they'd have to trade like me, and I don't want that. It's really difficult to trade in front of people. We didn't do it in a prop firm because of that reason. Are you going to make the same exact decision with all these eyeballs on you and questions coming at you? Why'd you do that? Why'd you do that exactly? It's hard. I'm telling you, it's hard. Now, if you haven't seen this session, Paul, that's a good point. If you haven't seen this session of these edge zones and when they go green, what should happen, start your internal clock, I did it, I think 2 or 3 Tuesdays ago. Watch it and then watch this replay. It's a good word, Chuck, tell is a good word. It's another tell, and that's good information. I don't want you guys, there's enough pressure on us trading. Don't put additional pressure on yourself, if indeed it's pressure. Yes. So Mark asks a good question. Is it the clock? Well, is it the clock or what you see that causes you to get out of the position? I read your question, assume what your question was going to be when I read the first few words. So now I'm going to tell you I don't understand the damn question. Is it the clock or what I see? Well, it's both. It's 1-0 when to set the clock. Do you see the 38 evens when they went green? And they went green after we walked up 4 ticks? I want to see it keep going. When I seen it flicker lower like that, that's when I said I'd cover some. So it's the clock and what I see. Well, what I thought the question was going to be is the clock, do I start my clock then when I start seeing what should happen? Yes. Or do I start, that's the snap the ball analogy that I'll say in the room. When do I start my, and at what price? So there was 37 quarters. They ended up going bid and staying bid, and then went up to 38 quarter. Then 38's got bought with an aggressive edge zone that you no longer see now. That's why it's tougher to review if you're not recording this. And then you see it flicker down. This support holds, but you start scratching your head. You can't get above 38, can't get above 38. And now are you surprised it trickled down like this? No, it took too long. So if you were long using this, you probably still aren't long. But you knew the right question to ask, and most importantly, knew the time to ask it. And write that down. It's not just the right question, it's the right time to ask that question. And again, timing is about how long something might take to go up or down. No, I mean, to me, and this is a good question, versus absorption or something else to get me out. Another market could get me out. Absorption to me is the same thing, only seen differently. So like when there's a big imbalance green and the market doesn't go up, it's like an automatic assumption that there was absorption there. That's why it didn't go up, right? So if that quick buying couldn't get it to pop right away, well, it's probably absorbed, right? I don't, John. Do I focus on volume changes, he asks, to determine the when moment? I mean, if you're asking, like, does it dry up? Not necessarily, but that doesn't mean it's a bad idea. Just be consistent with it. So you see the market go up and lets out a lot of volume and can't go up anymore. Maybe that's a turn, and that could be your when moment. I mean, and here's the thing. I'm not trying to sound like this works every time, but it's pretty accurate in helping increase your timing. You got to work on it. You don't have to think that it was going to trickle down all the way to these 35 halves. However, you started scratching your head. Why can't it go? Why did it do this? Maybe get out. Why can't it go? Why can't it go? At least when it goes 37 even offer, you're anticipating or not surprised at this downside, right? Because 38s should have went, didn't. 37 quarters should hold, went offer. You see my point in minimizing your surprises, and that's reading order flow. And it's much easier to read it this way than just straight from a dome. I always had that feel of, hey, it should go, it should go, it should go. Now I'm able to show you guys with a better visual. That's why one of my sayings is there's always a better way to see the same thing. Hey, Brad S., ask that question again, though, from the trading room. And I'm bringing along an update from last week when I introduced Madison as far as her role in the trading room. I'm really bringing her along slowly. My goal is not for her to be a professional on-air personality or anything else. It's just an assistant to help me miss less. That's all, right? So I've got some Twitter following that we're doing to see any tweets that might help and work on that, and some other resources to look for real-time, simple information. Not necessarily something that's going to be squawked out to make us 100,000, but you never know. Just things to paint a better picture and miss less. I think that's what we all work on, is to miss less. And when you guys join this community, you're missing a lot less with more eyes and ears on what matters. Dave, for instance, messaged me in the room and says, keep an eye on the Russell. It made him money today as a great ancillary. But, that is her continued role in the room. Also some things that, even though it doesn't take a lot of time, it's something I didn't like doing every day. It's a pain in the ass. Writing down yesterday's high-low close and volumes, overnight stuff. And some people might say, well, I like to do it because then I see it where it happened. Listen, I know what it looks like at this point, what a high-low bar is going to look like. And then I review and go back with you guys in the room to look at it. But I like knowing and writing down this stuff, but don't like looking at it. I like the economic calendar to be squawked out, what's coming out, then I could disseminate what's important. You watched them all, Brad? Yeah, but you watched all the videos in track 4? Oh, okay. Well, that's still impressive. Well, Dr. Raj, though, you've been around since December. Brad just joined a week or so ago. He didn't watch all of them, but a lot of them. The way they're categorized now makes it more efficient to go through them, I think. And then it's how much time you got. Brad says he eats and sleeps this stuff. So you're going to watch more of it. Listen, I listen to myself sometimes and I get help from it. No coincidence that this old support in here is new resistance on this rotation. Let me update you guys quick because I think there's a trade at some point that'll happen from this. I don't know if it's something come out? All right, hold on a second. Now you're seeing no red edge zones, but you get some red imbalances that are coming in here. It's already a bearish transition. This also is helping you with your transitional moments to put this on here where my cursor is instead of having to wait too long to make your moment. Hold on a second. He's not pleased with how trade talks went with China. That came out moments ago. President Trump not pleased with how trade talks went with China. Probably that downside, just 2 points. I don't know how bearish that remains, though. It's more just negotiation type talk going forward. What I was going to say is here, good example, red imbalance. Look at this, red imbalance, 35 quarters, and are they bid or offer? They were bid, now they're offer, now they're bid, right? Quarter bid, half offer. Think about this a second. You should have it start to walk up. Why? It didn't go down. The imbalance, red imbalance went away, but the faster the market moves, is another point I want to make. The faster your internal clock has to go, right? You got to adjust it to volatility. So a little faster now than we were 15 minutes ago. Oh, that's a little bearish. Be careful being long. He's a little displeased in the attitude change in the North Korean leader. I think this is coming out of meetings with the South Korean President Moon. I'd be careful long, even though you had that green or that red imbalance at 35 even that didn't send it up, or I'm sorry, didn't send it down. So we walked up 4 or 5 ticks to 36 even. These tweets are more bearish than bullish. He wasn't happy with the way trade talks went with China, and he doesn't like Kim Jong-un's attitude change. And quite frankly, neither do I. Take a look at the NASDAQ making lows. Pretty damn weak. Facebook getting some blame on their session lows for some of this weakness in the tech space. Be careful being long, again, because of these tweets. Put a little pressure. So you're tying in news, order flow, balancing which one's more important, understanding a little bit more of the why. Market's still slightly bearish just based on a B2B transition. But I want to hold this. I don't want this to be more like a trading room here. I want it, the way I walk people through that, I wanted it to update some of the things with crude oil. If you start getting Trump his focus might go away from North Korea after the meeting, from the investigation on him. He's going to get really bold if the investigation on him starts to subside and he's exonerated officially. Okay, he's going to get, and he's bold now. He's going to get more bold and confident because he'd have been on the job for a year and a half. Some things are pointing in his direction with economic growth, low unemployment. Stocks, even though they're not on their highs, they're still strong. The one thing, or maybe this peace especially if he achieves success in denuclearizing North Korea, he's going to feel real emboldened. And if gas prices, because of high oil prices, is a stick in the wheel for him, I want you to not be surprised if he starts going after OPEC like he has with NATO nations not paying their fair share, China, NAFTA. You could line them up. And if it's, I don't know the strategy, how he could get oil prices lower. Maybe releasing some of the strategic oil supply that the U.S. holds to increase supply, or just attacking OPEC directly. He brought China to the table in trade talks. He brought Mexico and Canada to the table in NAFTA talks. Kim Jong-un to the table in denuclearizing that rogue state. And why couldn't he bring OPEC to the table and saying, quit manipulating prices? I say this because it's one of the negatives to the overall picture. But gas prices are so high, people say. But gas price, if they're, because they're around $3 a gallon here in the U.S. And I know we're going into the summer driving season and everything, but oil at $72 a barrel keep gas prices high. If it continues to be a problem as we move through the summer, and like I said, the investigation starts to wear off, and he's emboldened by success with North Korea, you're going to have a bold guy confident. And I've heard him in previous interviews in the past, before he was president, not liking OPEC too much. Ken says his Sunday afternoons always includes a track review. Is that sad or professional? After 5 years, he just loves it. Well, thanks, Ken. I know someone's in the UK is listening to my voice on Sunday afternoons, drinking tea. The careful being long comment and some of this weakness are these Trump tweets. Again, he came across with not pleased on how the trade talks went with China, and he's disappointed by a change in attitude from the North Korean leader. Summit meeting may not work out for June. What did we say last couple days? The knee-jerk reaction is to the downside if there's pointed comments that the meeting might not happen. That could be your first one. Trump is not just playing politics in the administration. They're not going to let Kim Jong-un, if they feel like he's going to cancel the meeting, they're going to try to get ahead of that. So they don't seem like they that North Korea walked away first and canceled it. But remember, he's meeting with the South Korean leader today to go over preparations for this June 12th meeting. That's why these comments are coming out. It's not just out of nowhere. The next thing to watch for. That's why these meetings are important every Tuesday. Not just with content and review and some new stuff here and there, but also update. Next thing to look for is a comment coming down the wire from North Korea. And that's where I'm going to leave you guys. And talk about journaling in the next couple weeks. Some of you guys know what I created. It's taken a lot longer than I wanted, some of it on me. but doesn't work for all platforms. But it should work for more than one going forward. But what's important about journaling is what to journal and how to make it practical. I'm going to give you guys a quick analogy, and then I'm going to let you go with anything that's worthwhile. If it takes you 3 hours a day to exercise to maintain a weight, you're not going to keep doing it. No one's going to work out for 3 hours every day. You haven't got to make it practical. You change something up if it takes you 3 hours of working out to maintain a weight. But I give you that example because nothing that's not practical is going to be long term. He's still talking about Korea. We'll see you guys tomorrow in the trading room. Not yet, Raj. I'm going to do that right now for you, and then email you. But I want you guys that are coming here every day. I don't care if you come to the room 3 or 4 or 5 days a month. Still join the room because it's great review and the execution, the education in real time every day. It's a cup of coffee a day. So if you miss 3 weeks, who cares? Don't drink as many vanilla lattes. But come to it even if you can't make it every single session. It's important and it's well worth it. I had a guy, I'll tell you a joke. Hold on. Stop the recording first.